The exchange business is getting far more competitive. MCX SX will launch in the next couple of months or the next 2-3 months. The BSE has already got very competitive in the futures and options segment and has notched up quite significant volumes in futures over the last few months. And in the process has carved back some market share from almost a monopoly status of the National Stock Exchange. Ashishkumar Chauhan from the BSE joins in to talk about all of this. Ashish, morning. Before we talk about costs and your market share, just want to ask you about the BSE 100 index in which you're launching derivatives. What are the dates and what kind of costs are you going to launch with to get market share?
Basically, BSE 100 is an older index, and a lot of mutual funds do benchmark on BSE 100. It also has a very good coefficient of correlation with MSCI India, Nifty and other indices. So it's basically a slightly broader based than Sensex and Nifty, and so we think it has a good potential. In terms of the cost, basically when you trade on BSE 100 or Sensex or any futures on BSE, what you end up paying is around 50 rupees on futures per crore of trade, which is almost 80% lower than any other competition in terms of the cost which you pay to the exchange. And if you trade on options, then you pay on a round trip 50 rupees per crore on premium, which is almost 99.5% lower. So what happens is a lot of people want to trade on BSE now, because if the systems are similar, if products are similar, then of course they would like to save costs. And so once you have a basic liquidity available, you would rather want to trade on that market, which gives you more bang for your buck.
I understand this strategy is paying off well now, but do you think it's a sustainable strategy to operate at a cost line like this, or do you first want to build up a certain amount of critical volume and then start raising costs gradually?
See, the way we look at it is in case of an exchange like BSE, which is existing for 137 years and has Sensex, BSE 100 and many such marquee indices, what our incremental costs are not that high. So what happens is ultimately whatever you end up charging, in some sense you can continue to sustain it for pretty long. And that's what current plan is, that basically what is required for an exchange is that if you have a derivatives volume, it also builds on the equities volume, and so it's kind of a cross-selling across segments. And we are also starting many new products in mutual funds. Like this week we are going to start testing on our beta phase on XSIP product, that is the systematic investment plan through exchanges, and similarly we have started liquid funds beta product and so on and so forth. So we basically, our aim is to create what I call a robust, sensible, secure market with newer products, more what I call competitive products coming up, and that would basically benefit the investors, benefit the system overall, including the fund industry, including the exchanges, including investors, the broking community and so on and so forth.
Sure. How much of the enhanced market share that you witnessed is because of the kind of costs you offer versus the liquidity enhancement scheme, which seems to be from our feedback quite an important reason why many brokers are using the Sensex futures?
It's an important aspect, I won't sort of deny that, but the fact is there is a limit on daily basis for how much incentives we can pay. So today what we have announced is actually 4% of what is supposed to be given. So in a sense, if people are trading 100,000 crores, we are paying only around 4 to 5,000 crore rupees worth incentives. So and incentives are basically very similar to the STT and other costs, the statutory costs which people are incurring. So if you trade on BSE just to earn incentives, actually you will be in losses. So, and now you are getting only 4% of that. So in a sense, if people are trading on BSE to earn incentives, they would be in losses by probably 96% of their statutory costs. And I don't think that would be the motivation for people to trade on BSE or any other exchange to make losses.
When will incentives be withdrawn, Ashish? And do you expect a significant drop-off of volumes because of withdrawal?
See, the way it works is the incentives schemes last for 6 months as per the regulations. And on any product, they last for 6 months, and then there is a 2 months cooling period going forward, and then again you can restart. So in fact you can continue run but with breaks, and you can also give incentives to different products once in a while. So we had incentives on Sensex till sort of this month, and next month the incentives on the BSE 100 and stock futures and other things start. So in a sense, the way, and incentives are basically a very small portion of the total, the cost a broker or an investor actually incurs on an exchange. So incentive is more like when you open a new store, you give a little bit of discount, and the people, once they start coming in, they are used to it and they know that you have a good products, you have competitive prices, they kind of stay back. So incentives are generally used for those purposes, and we think we have basically the ability to, once we show that, and we have what I call the way it has happened over the last couple of months, we think there is a confidence building up in the market participants that BSE has equally robust system, and it's now basically able to provide real-time risk management, trading, clearing, settlement on par with anywhere else in the world, and it's able to come out with newer products, better products, more interesting sort of products from investors' perspective, and that's where we think ultimately the innovation is what will count on the long run, and the incentives or other things may not be that relevant going forward.
Good luck, Ashish. Thanks very much for joining in today. That's the Bombay Stock Exchange with its strategy going forward. Markets are holding at about 51.09, the Sensex up 200 points.